Yes, good afternoon, sir. Isa, please.
Good afternoon.
Respected GM Sri Das, sir, all executives, unionites, seniors. Very good afternoon to all of you and my faculty members as well. This is the first webinar of this new year. So first of all, my best wishes to all of you. Happy New Year to all of you for this new year. Because of the technical reasons, power cut in Delhi. So Sri Hardev Satya sir is not able to join this webinar. But as and when immediately power will come, he will join us and he will deliver his webinar. But yes, our discipline in charge, Cadet Sri Dhirendra Kumar will continue with this webinar. So I request our GM Sri Das sir for to inaugurate this webinar, and our DIC Sri Dhirendra Kumar will deliver on the same topic like decoding financial statements, sir. So under Union Learnathon, under the C, we have many activities. So one of the activities, this is the second webinar in the series. First was conducted on 29 December, and this is the second webinar, and this is the first for this new year, sir. So now over to you, sir, to inaugurate this webinar.
Thank you. Thank you, Mr. Raji. I think this screen will continue to display. Due to technical glitch, there is a delay in commencing the webinar, or are we going to change it? Okay, thank you. So, good afternoon, dear Unionites. First of all, let me take this opportunity to wish all of you a very happy and prosperous New Year 2022. We all are aware that our training system has been spearheading knowledge management as an ecosystem in which the staff members undergo various strategic training and development initiatives. Of course, all these training and initiatives are strictly as per the requirement of our organization, and ultimate objective is to upskill, reskill of our staff members. As new initiative, an exclusive learning series, which is known as Union Learnathon, is going on to supplement the training and development needs of staff members. The Union Learnathon series with the theme Learn to Lead is facilitating learning and development to staff members on continuous basis. The series is intended to upskill staff members and prepare them well for present and future roles, including the ensuing promotion process. There are many activities going on under Union Learnathon. Just a few I would like to mention: quiz, mock test series in the name of Aspire, Union Gyan Kasoti, podcast, webinar, Gurvar Vichar, and so on. And of course, our training system, especially our staff college, had been kind enough to provide all the study materials on promotion process on each and every topics, and mock test questions are also hosted on Union Prajna portal, which are available for all of you 24/7. I request all of you to take part in all these activities and get maximum benefit from this. As we know that our staff college had arranged one expert to conduct today's webinar. The topic was very close to my heart: decoding financial statement, why bankers fail. Due to technical reason, the expert is unable to join right now. In the meantime, our own DIC, discipline in charge from Staff College Bengaluru, will continue. So I would like to hand over now to the Principal His Grace Misraji to continue with the rest of the programs. Thank you, Misraji. Thank you all. Let us take part in all these activities which are going on under this Union Learnathon, And at the same time, I wish all the best to all the unionites who are going to participate in the promotion process. Thank you. Thank you all.
Thank you so much, sir. Thank you, sir, for taking out the time and motivating all of us and guiding always. So I apologize to all of you for actually I was trying for half an hour whether some issue is there in that part. But yeah, our DIC discipline in charge, Sri Dhirendra Kumar, is ready to deliver this decoding of financial statements, why bankers fail. So my best wishes to Dhirendra Kumarji for this webinar. Now I hand it over to Dhirendra Kumar for continuing this webinar.
Let me take 1 minute. Actually, Rizkeshi, this is our internal capability, and we appreciate. We do appreciate from central office that once we have decided to conduct a program, we are going to do that. And of course, our faculties are quite capable to deliver equally. Okay, so we do have all hopes and faith on our training system as well. Okay, welcome, Dhirendra. So I would like to be the part of this today's webinar for the entire session.
Okay, thank you, sir. Thank you very much, sir, for having faith on us or me. So, respected GM Das sir and Principal Rishikesh Mishra sir, with your blessing, I am just going to start this session. And friends, good evening to all of you. So, in this webinar, we are going to discuss about the financial statements. And we will discuss all these things that is not usually we are not seeing in analyzing the financial statement. So what are the things that is beyond the written one we are going to discuss in this webinar, and we are hopeful that this will be very useful for all the these participants, those who are going for the promotion test as well as for day-to-day working of the branch. So this will be very useful. So friends, now we are starting this yes. So friends, usually what is the meaning of the financial statement? So prior to 2013, so there was no clear-cut meaning of financial statements. So usually we are treating profit loss, balance sheet, annexures, that is auditor report, and this director's report, cash flow statement as a financial statements. But in 2013, after the amendment of Indian Company Act, there is a clear-cut definition about the financial statement. And as we all are aware that as per section 2, subsection 40 of Indian Company Act, the financial statement means balance sheet, profit and loss, second number, third number is cash flow statement, fourth number is annexure. And here annexures means all the annexures of balance sheet, profit and loss, as well as the auditor report and director reports, and a statement in change in equity. So these are the 5 statements. So collectively, these all are coming under the ambit of financial statements. So here in this webinar, we will focus mainly on 3 things, that is balance sheet, this profit and loss, cash flow, and as well as we will discuss about this director's report and auditor reports. So there are something hidden in there, and as a banker, we must learn what is how to read that hidden things. So that is very, very important. So with the help of balance sheet, what we can know? So we can know the reputation of the company, the people of the company. So now the question, sir, for the reputation of the company, we can know the this performance of the company, we can know the solvency, we can know the liquidity of the company, and with the help we can know the reputation of the company. But at the same time, how we can know the people of the company? So if the company is growing in all the way, so everywhere if the company is growing, that means the people associated with that company is good. So you can see the examples of different company that is listed in the Indian NSE or BSE. So there are many company, those who are doing good, their promoters are good, the people associated in the company are good, and those who are not doing the good, their promoters and the people associated with that company are not good. So for that, we have to do the due diligence of the promoter reputation. Then what is the reputation of their management? What is the reputation of their key personnel? That is also very, very important. So only balance sheet will not give all this information. For that, we have to go for the due diligence. And there are many credit information companies. So we are using the reports of many credit information company. But right now, civil is the prominent one, and we are using the civil. So with the help of civil check, we can know the reputation of the company. We can know the reputation of their directors, their stakeholder. Here, a stakeholder means only the management personnel. So this is all about the this knowing the companies. So a good balance sheet does not ensure a good borrower. This is 100% perfect. Why? Because balance sheet may be cooked. So I think you all are aware about the case of Satyam. Even in recent past, there is a case of IFSL. So there are many companies, their balance sheet was very good, their rating was also very good, but sudden there is a deterioration in the company health, the health of the company. So what is the reason behind this? Why? Because as a banker, as a stakeholder, we can know the past of the company. We can know of the project of the company with the help of the financial, but we cannot. But this financial statement is not telling about the future. So with the decoding of the balance sheet, with the decoding of the financial statement, we can also try to predict, we can also learn how to predict the future of that specific company or industry. And for that, what to do? We have to do the short analysis of that company, that balance sheet, and we should also compare the financial with peers one. The same level of the company, the same size of other company, the same type of business, we have to compare. So whether the financial of this company is okay or it is not. Then what is a balance sheet? So is this balance sheet reveals number one, company owes, and the amount invested by the stakeholder. So usually in balance sheet there are three things. One is the equity, second one is the liability and assets. Though equity is also the part of liability, but in a financial parlance we are segregating the equity from the liability. Why? Because equity is the inside liability. This is the liability towards the promoter, and this gives us a feeling of strength. Whether this equity is with compared to other liability, what is the position of the equity? What is the quality of the equity? Everything we have to see in while decoding the financial. So in one side, it is a liability plus stakeholder equity, and other side, it is the assets. And I think we all are aware about the liability or the this stakeholder fund is that also known as the source of fund, and this is the use of fund. So in the process of decoding the financial, we are telling how the promoter are bringing the fund in the system, internal accrual, internal infusion, external, and what is the quality? Everything we have to see, and how they are using this fund in creation of different type of assets. So I have already discussed with you in as per the financial this statement definition. There are 5 parts, but accordingly in balance sheet there are 4 parts. One is the assets and liability, that is balance sheet. Second one is the profit loss statement. So profit loss statement is also the part of the balance sheet in this term. And third one is the cash flow statement. And cash flow statement is the really a very, very important statement. Why? Because many company can declare profit. but whether the profit is available to serve the liability, yes or no. With the help of cash flow statement, we can know, yes, this company is the sound. So I was aware about a company, the company name was MTech Auto. So that company was, I think, 15 years back, that company was on a massive expansion and they were declaring very good profit. But the cash flow of that company was not up to mark. And despite having all these good financial, all these good balance sheet, that company failed. So why? Because of negative cash flow. So we should also see the cash flow statement. And the fourth or very, very important part is the auditor report. So this auditor report, and I'm also using the second report, that is director's report. Director's reports are also very, very important. So what is the importance of the auditor report and what is the importance of the director report while decoding the financial statement? That is very, very important. So balance sheet is like a this mirror of any financial any entity. It can be individual, it can be proprietorship, partnership, it can be company. And we have to arrange the items of balance sheet as per our own, because the promoter are preparing the balance sheet or financial to show it to the entire world. So we can term this balance sheet as, or the financial statement like a this bride or at the day of this marriage. So it is totally decorated. But as a banker, we have to decode all these things, where there is a decoration and where this is the actual one. So for that, what to do? We have to rearrange the items of assets and liability as per our own. That is very, very important. And after that, we have to go for different calculation of different ratio. So suppose I am in front of you. So if I am asking from all of you, sir, what is the position of my health? So anybody can tell, sir, it is good, satisfactory or not good. But this is not a complete answer. Why? Because you are not aware what is my blood pressure, what is my blood sugar level, is there any deficiency in my body? So it is not available to all of you. So likewise in balance sheet, while seeing the balance sheet, it will not reveal. So to know the actual health of the company, we have to decode the balance sheet, and there are different ratios, and we have to compare the ratios calculated after the this after the decoding of the balance sheet to with the this our benchmark, and if it is as per the benchmark, it is good. And not only up the benchmark for our bank, also the benchmark of the industry, also the benchmark of the peer. Because if the same level, same type of industry is doing good, their current ratio is suppose 1.2, and the same industry, their current ratio is 1.5 or 1.1, this is not a good thing. And if the ratio of our company, where we have done the decoding, we have done the analysis, is good with compared to the industry, that means it's a good sign. So we have to see the balance sheet. After that, we have to decode the balance sheet, and we have to compare with the peer one, we have to compare with the industry, and we have to compare with our benchmark. What is the benchmark? And it is also possible that this past performance will not as per in the future, because this part, yes.
I think sir has joined. Yeah.
Yes, yes, sir.
Good afternoon, sir. Welcome, sir. GM, sir, is there? Just a minute.
I apologize to the audience.
Okay, sir. let us welcome our Hargobind Sachdev sir. He's an ex-banker, GM, retired from State Bank of India. So because of the technical glitch, he was not able to join us. Now we welcome you, sir, in this webinar. And sir is having 39 years of experience in banking, having occupied senior position in UCO Bank, United Bank of India, State Bank of Patiala, State Bank of Travancore, and State Bank of India, where he headed the Central European Credit Desk at Frankfurt, Germany from 2006 to 2011, covering 15 countries of Central Europe. Has undergone international banking training from Asian Institute of Management, Manila, Philippines in the year 2003, and multi-currency lending technique training at the Euro Money Institute, London in 2009. He has a specialization in credit, foreign exchange, vigilance, monitoring, and appraisal of corporate loans, MSME credit, gold loans, agricultural loans, and NRI business management in assets and liabilities. As a forensic auditor, he has conducted various transaction audits allotted by banks. He was felicitated by the Central Vigilance Commissioner, Sri C.V. Chaudhary, for winning first prize for Best Article on Preventive Vigilance in 2015. He is also an accomplished public speaker, having conducted multiple motivational seminars for institutions like ONGC, National Housing Bank, and Bank of Baroda. He is an independent director and consultant to various big entities in corporate sector. So this is a brief introduction about our Hargobind Sachdev sir. I request our GM L&D Sri Das sir to welcome him for this webinar. Sir, because of the technical glitch, he was not able to join us. So now he has joined, sir, right now. So I request you to welcome him, sir.
Thank you, Mr. Ji. First of all, let me welcome Sri Hargobind Sachdev ji. Sir, we were eagerly waiting for your presence for this webinar, and ultimately you are here. So, from corporate office, we heartily welcome you, sir. You might be aware, sir, this training system is conducting this Learnathon. The theme is Learn to Lead. Okay, so weekly webinar we are organizing. Last week also on Wednesday, one webinar was there. So today also your gracious presence. Once again, we welcome. And topic has already been selected, which is very close to, very relevant for this time, because sir, this promotion process, this is the season of promotion process in the public sector banks, and a lot number of people have already connected and who are aspiring for promotion also. So this will be a great help for them also. So decoding of financial statements. This is very relevant, and we are going to benefit from your vast experience as a successful banker. Particularly, and I have gone through your experience also, sir. You are expert in credit and forex, and of course, your stint as a chief vigilance officer will immensely be helpful, because this is one of the C, which is always bankers do not log are afraid of. They are very much afraid of, and that is why while taking the credit decisions, they are also afraid of this vigilance department of the bank. And you had the experience. Working as chief vigilance officer in UCO Bank and United Bank of India. So from that perspective, also you will be guiding our friends from Union Bank of India. So once again, we welcome you, sir. Thank you very much, sir. Chris Casey, are you there?
You're there, sir. You're there.
Yes, sir. Sir.
So we can start now from the beginning.
Yes.
Yes,
Okay, sir.
Please start.
Yeah.
Well, respected General Manager, sir, worthy principal, sir, technical staff, and the future of this great institution of Union Bank of India. my worthy colleagues. Apologizing for this delay. I welcome you. I say that तालीम नहीं दी जाती परिंदों को उड़ानों की तालीम नहीं दी जाती परिंदों को उड़ानों की वो तो खुद ही समझ लेते हैं ऊंचाई आसमानों की. Friends, all of you are bankers. You have joined this great institution after struggle, after qualifying among more than 5 lakh contestants and joined this great bank. And you all know how valuable is the analysis of a balance sheet while taking a credit decision. We need not emphasize that. But today, I will take you certain aspects which throughout our experience of having worked in a continent, European continent, in Gulf, within all corners of India, we found out what the balance sheet should show, what the balance sheet should not show, how deceptive the document can be, and what all you have to do before you disseminate the balance sheet. So we will go into that. I have structured this presentation in a slightly reverse way. I will first articulate what is not in the balance sheet, which you must know about, and then I will come to the routine, what is in the balance sheet and how to look at that before taking a credit call. Friends, credit call is a must. In fact, there is a movement now that those who do not take credit decisions will become part of vigilance. GM sir, need not detest taking credit decision because otherwise our bank will be a big loser. Only those banks which have lent have survived. Those who do not lend will only depend on reverse of Reserve Bank of India by keeping our surplus money there. That will not even take care of the rentals of the premises which we are occupying. So decision making in credit is a must. Today we will empower you to it. Despite that if decision goes bad, then it is a bona fide failure. You need not worry about, vigilance will never catch you. But before going ahead, I will only congratulate you that the Bankers Almanac says that after merger, Union Bank of India 169 bank. It is one of the largest banks in world now. So you are member of a great institution with its footprint in Western India, which is Mumbai and Gujarat, and then now merger of Andhra Bank and merger of Corporation Bank. Your bank has become a totally national bank, and you are 5th largest PSU bank in India today. Next. Sir, those who are appearing in the promotion interview, they know all about bank. But I will tell you, it was founded on 11/11/1919. If you add all these numbers, those who believe in numerology, it makes 6, and 6 is the luckiest number. That is how I see the future of this great institution and the future of you guys as the makers of India's economy. It was founded by Seth Sitaram Poddar, and all of us are proud that this was the only bank whose corporate office was inaugurated by the father of nation, Mahatma Gandhi. There was another bank, there is still that bank, UCO Bank, which was also inspired by the father of nation, who inspired GD Birla to open that bank, because a lot of Vyaparis and traders of Eastern India were not able to get benefit of Citibank and various foreign banks at that time. So we are very fortunate that Union Bank was inaugurated by Father of Nation. So his 4 pillars of honesty, integrity, truth, and trust, they are the basic foundation of Union Bank of today, which has got 12 crore customers. 12 crore customer is 1/4 of Europe. It is bigger than almost Bangladesh population. So the business is now almost 16 lakh crore, out of which 9 lakh crore are deposits and 6 lakh crore are advances. We have almost now 10,000 branches, 13,000 ATMs, and we are now 78,000 strong. Friends, our capital adequacy is 13.64% as on 30th September. and profit is 1,626 crores. Unfortunately, because of the legacy NPAs, our gross NPAs are 12.84% and net NPAs are 4.61. And we have overseas branches at Hong Kong, Dubai, and Sydney. We also have rep offices in Abu Dhabi. We have a subsidiary in London and a joint venture in Malaysia. Next. Next. Friends, before we delve into, kindly come back, the previous slide. Before we come into the nitty-gritty of disseminating the balance sheet, I will submit a brief story about the power of business intelligence. You see, there was one advertisement one morning in newspaper that Microsoft India wants to appoint one office cleaner. Very strange advertisement. All of you will be surprised why I am referring to that advertisement in analysis of balance sheet, but it will add some value to what I am going to articulate further. In this advertisement, they said that we want an office cleaner in various multi-language newspapers. And when people asked Microsoft that for the post of office cleaner, why are you advertising so severely? Then they said that it's a company registered in 140 countries, listed all over. So they have to observe certain, norms and compliances. So they are advertising. So one guy ultimately, after a stiff competition, was selected, and he was congratulated by the CEO, saying that you have been appointed as the office cleaner. Now, to that extent, the honor was given to him that CEO shook hand and went inside his room. This guy was sitting outside the room of the CEO and peeping again and again into the room whenever somebody was coming outside the room. Then CEO asked him, why are you waiting? Why are you peeping in? You have already been selected. Come and join from tomorrow. This gentleman said, sir, I do not know my working conditions, my salary, my leave, entitlements. Kindly brief me that. So CEO immediately called his secretary and said, please take the email ID of this person and send him all the terms and conditions of this job. That lady called him. He does not have an email ID because he is basically a very undereducated person, only a cleaner. He does not have email ID. When this thing was told to the CEO, he became very angry, saying that Microsoft cannot employ a person who does not have an email ID, because if his competitors know that this man has no email ID, they will say that Microsoft has persons who do not know how to run the email. So this guy was fired and not taken into job. Now, since he was a very intelligent person, when he came down, cursing his misfortune or having lost the even before joining, he saw somebody across the road selling cut fruits, some salad type of fruits which people were buying for say 25 rupees a plate. Since he was hungry and slightly upset, he also purchased a plate and liked the idea. Immediately caught a city bus, bought fruits worth 1,000 rupees and started doing the business. And he was very hardworking, he was hygienic, and his display of fruits and the service was so liked by the office goers in the afternoon that started, running a small restaurant, then a hotel, and then started supplying all the, dry fruit, wet fruits to various big corporates and hotels. One day, his son has called saying, Papa, the LIC policy of one my name has made big news. The LIC corporation wants to honor us. Please come to this function. Then he said that he doesn't have time, but since son insisted, this guy went there and was given a shawl, a packet of sweets, and a lot of good words were being spoken about him, that having been a poor person, he is worried about the future of his children, has taken a big insurance policy. At that time, this guy was some papers kept before the person who was speaking in his honor. That guy asked him, what do you want to see? He said, I just want to see the policy which you have issued in our favor, because I have not seen. So this guy said, okay, you give your email ID, our office will send you the policy. And he immediately burst out, said that he does not have email ID. So that is, in that seminar, everybody was wonderstruck that a person who does not have even an email ID can take a 1 crore policy and can flourish so much. So I just want to tell you, friends, most of you are young bankers. I was also one of you. If you do not know how to analyze credit, do not worry. You are still a good banker. A banker actually believes in studying the person's character to whom he is lending. The business industry's future. It is not only the balance sheet. There are so many things which are not part of the balance sheet. If you can assimilate that, you can understand those things, you will be master in the bank, survive and grow to the top positions. So do not feel inadequate that you do not know much about balance sheet. Balance sheet will come. It will come through experience. But before that, you must learn what is not in the balance sheet, which also has to be seen along with the balance sheet. Next slide, please. Now, what is balance sheet and what it hides? Financial statements, normally we call them as balance sheet. In banking parlance, they hide two things. Number one is the reputation of the company. Whether you see a Tata balance sheet or whether you see a balance sheet of a grocer, you will not be able to see the, whether these people are paying taxes in time, whether they are doing false invoicing, whether they are submitting proper stock statements. All this will not be visible from a balance sheet. You will also not know the people behind the company. You may know the owner, but who is the person running the workshop? Who is the person who is running the factory? How many people are going for attrition, resigning? How many people are staying with the company for long? All these things also balance sheet does not tell. But these are two very important things which you have to ask when you are accepting a balance sheet to consider a proposal. Key to decoding balance sheet: due diligence of promoter's reputation, human strength and skills, and track record of servicing loans. We have seen lots of corporates vanishing overnight with the death or resignation of the key person. So when your balance sheet is before you, before opening the first page, you must Google, find out whether any cases are pending against the company, whether they have defaulted, whether income tax people are behind them, whether this owner has been arrested some time ago by DRI, or whether any government agency. All these things are important before opening the balance sheet. So you have to first, and then you see the staff page of the balance sheet. How many workers are there? These things are more important than going to numbers, which we will come later. Then now you have got powerful tools of Sibyl and Acrylic. If it is a advance above 10 crore, above 5 crore, then you have various other more powerful tools on RBI sites. So first check the Sibyl before opening the balance sheet, because what is happening is we are doing a lot of proposals and sending to our zonal offices, analyzing balance sheet, putting all the ratios. Suddenly head office says not good. So before opening balance sheet, check the Sibyl, and also if it is for 5 crore and above, go to the RBI's Acrylic site. You see whether the account was SMA 0, SMA 1 or 2, how many times, whether his previous car loan he had paid in time. If these checks you do, then you are ready to open the first page of balance sheet. Next page. Now, a good balance sheet, cannot ensure you a good borrower. A good borrower can be ensured by what I submitted in the beginning, is by doing the 360-degree due diligence of the borrower. His track record, the business industry scenario. Suppose you finance an industry, suppose you finance a mask making factory today. or a sanitizer making factory today. It will last till the corona is there. If you want to take 3 years, 5-year projections, probably this will not be proper thing to finance. So before accepting a proposal, do a proper due diligence of the prospects of that industry in longer term. So a balance sheet can only tell you the past of the company. Through 3 years figure you can see, or it will tell you the present of the company. Suppose you get September figures or you get 31st March 21 figures, you will know the present of the company. A balance sheet alone, if you master and take a credit call, then also it is not adequate. A balance sheet cannot tell the future. That is one flaw in this. Although it can give you a CMA data, can give you some estimates of how business will perform, but maybe a corona thing or any other catastrophe or a natural thing happening will all unsettle those projections and loan may go bad. So decoding a balance sheet, long-term view of business, SWOT analysis. What is SWOT analysis? Strength, weakness, opportunities and threats to that particular business which you are going to finance has to be done. And then you have to do peer level comparison. What is peer? Peer level comparison is how other companies in the same manufacturing or trading industry are doing. Suppose they have shown that they are 20-year-old and can do a turnover of 50 crores, and this gentleman is telling that he will do a turnover of 100 crores, then signals are very obvious that this guy is very ambitious and he may land you in trouble. So peer level comparison of reputed companies in that line can also be assimilated from internet, and then you compare the projections this gentleman has given and then make a credit call. You will not regret your decision. Next slide. Now let us come to balance sheet. We will analyze various pillars of balance sheet, and normally we feel that these 2 pages, trading and profit and loss account and the capital structure, that is balance sheet. No, gentlemen, balance sheet is much beyond that. It's a financial statement which reveals what a company owns. Now, what a company owns, you will find in asset size. You will find what are the fixed assets owned by it, what are the mobile assets owned by it, what are the current assets owned by it, what are the non-current assets owned by it. If it is a loss, then it will also be in the asset side. So what a company owns is reflected in balance sheet, and what a company owes. What is owes? What company has to pay. You will find on liability side the also find the application money, shareholders application money, suppose shares are not allotted. What you will find is bank finance. You will also find funding availed from NBFCs for car loans or various other vehicle loans or transport vehicles. You will also find unsecured loans. So the what company owes will also be visible. And the best thing which you have to see in a balance sheet and which it always reflects is the amount invested by shareholders. That is the skin of the promoter in the business. Skin means that what is the capital he has brought in. If the promoter is sincere, you will be delighted to see the amount of capital on the stronger side and the proportion to what the capital is visible in the balance sheet. Suppose a borrower has come to you for a loan of 20 crore and his paid up subscribed capital is 1 lakh. Then you can always decide that this guy is ambitious. He will not have adequate resources or pockets to service your debt. If he has a capital of 1 crore rupees fully subscribed and he's asking for a loan of 3 crores or 4 crores, you can still take a credit call depending on the collaterals he's offering. But if the amount invested by shareholders is very thin, there is no need of burning your fingers. He not a welcome borrower in your books. Balance sheet shows assets on one side, and liabilities plus shareholder equity on other side. It also shows sources of ownership of assets through owners' capital or borrowings from banks and outside. See, when you have just a glance of balance sheet paper, you will find that the assets are there. They will be fixed assets, they will be current assets. Now, those assets, if you just compare with the capital may not be enough to hold on to all these assets. You will find that these assets have been funded from either unsecured loans or from borrowings from banks or NBFCs. So you have to just have a brief picture before taking a credit call that what exactly is it over leveraged, whether the borrowing is on the higher side, whether the capital is thin, or whether the capital and borrowings are more and assets are less, and he has given loans to his subsidiaries diverted to related parties. So these are the things you have to first look, first look you have to make on balance sheet to take a credit call. Next slide, please. Now, balance sheet people think is just those two papers which I submitted in the beginning. No, it has four parts. Number one is, of course, balance sheet, which we call, where the capital is there and assets and liabilities are there. Second part is P&L statement. This is very, very important because it shows you the turnover, the gross revenue generated. And third part is far more important, which shows you cash flow statement. If the business is not having adequate cash, he will not be able to service you interest. Suppose you fund a business of, say, road construction, where he gets his payment once in a month, and throughout the month he has to spend on labor, on bringing in raw material for building the road. And if his payment stucks up because of low quality or cash flow mismatches of the person who is getting the job done, then this loan will become sick. So you have to ensure that the cash flows of the party whom you are funding, they are solid, they are continuous and incessant. And last and most important part of a balance sheet, which we call as financial statements, is auditor's report. In next slide, you will know the value of auditor's report. It is the most important part. Most of us just go through balance sheet and P&L, do not go through auditor's report, and that is why bankers fail, because auditor is privy to so much of information which as a banker we are not. We will discuss that further. Next slide. Now, it is a wonderful tool to evaluate business. Before we decode a balance sheet and related statements, let's clearly understand the role play a balance sheet has. It is a tool to evaluate the past and the present of business. That is all. All other things have to come from your reading of the business ambience there. So the ratios have to be compared with the benchmark ratios of RBI. Now, the moment you get current assets, current liability, you just divide and work out a current ratio, and then compare with Union Bank of India's current ratio benchmarks for traders, for manufacturers. And if the ratios are anywhere near there, you accept it. Suppose ratios are much below, do not send that document for sanctioning, because already if his current ratio is poor, that means his skin in the business is very thin and he will not be able to generate adequate surpluses to service your debt. Second thing is the projected performance has to be in consonance with past performance. This is very important. What happens is we get swayed. He will come with so many orders. He'll say, "Sab, this year I have done 1 crore turnover, next year I'll do 25 crore. And we purchase his argument. He says, "I am going to give you 5 crore worth of my big house as security." We further get attracted towards him. No. Even though you might be under pressure, you have to bring one MSME loan every month, a good MSME secured. But in that pressure, you don't have to accept projections which are distant from reality. Sometimes he might have got a government order. that also you have to cross check with the government authority whether it is a fake order, whether it is a genuine order, or whether it is an order in process, or it has really become an order and fructified into a performance now. Only then take a call. So two things to remember: balance sheet ratios you work out. Everybody has now become expert in Excel sheet. Just put all the various figures of the balance sheet, workout ratios. If you find ratios as per RBI norms, as per Union Bank of India guidelines, then touch the balance sheet further. Further is in his CMA data, whatever projections he has given, you kindly compare them with his past performance or ask for orders, verify the genuineness of the orders, and then proceed. Next slide, please. Friends, what to read first in financial statements? Out of 4 parts forming part of this financial statement, the first thing to read is audit report. Now, all of you will be surprised that why I'm telling you this thing. No, you'll say not many people, the small ones do not bring audit report. I tell you, the reading of audit report is most important. See, as a banker, are you aware of company law? Do you know what is income tax law? What is the various type of methodology to? Are you aware of CSR rules which have to be complied by each company? Are you aware that he is into income tax disputes? How many legal cases he is fighting? Maybe for pollution, maybe for labor, and how much of statutory violation he has done, whether he is depositing TDS, which is he's recovering from suppliers, whether he is paying the dues to the labor as per the labor laws, whether he is paying income tax in time. So all these things you are not aware. These are all part of audit report. So unless you know the audit report, you will not be able to find out whether this fellow is in the right sort of the law. So any proposal of say even 50 lakh, 1 crore, 2 crore coming to you, please tell the borrower with folded hands, sir, give me your audit report signed with the proper number given by the chartered accountant. These UDI numbers are important. Unless it is accompanied with an audit report, I tell you within 1 or 2 years you're going to end up in an account becoming NPA. So auditor's report is the first document. Put all the balance sheet, cash flow, all those things below, open the thing and find out responses. The auditor also tells you that the account is NPA in that bank or not, whether it is going to be an ongoing company or not. Today a big airline, today auditors have said that airline will not be continuing as a ongoing company because it does not have adequate cash flows. It cannot pay its term liabilities. It cannot pay salaries. It has defaulted in payment of oil and petrol bills. It has defaulted in payment of taxes. So those things are always mentioned in auditor's report. So my request to all of you is that Union Bank has to be strengthened with top 1000 assets in India, top corporates, and there you have to be very selective. Find out the auditor's report, what all he says, just mug it up. If you read 3-4 balance sheets, audit reports, you will become an expert, and next time your eye will go on only to those columns which are very important for taking a credit call. So please read first the audit report and then proceed to other parts of the balance sheet. Next slide, please. Now let us dissect balance sheet. We'll have to first go into the liability side and then we'll have to come to asset side. But before that, I will take only a few minutes of yours in telling you what happened when I went recently for taking a credit call to a unit in Saharanpur. This unit is very good unit. Everybody said it is very good. It is making spare parts for Hero automobile. So naturally Hero is number one motorcycle in world today. So I thought that the person associated with Hero will be a good corporate. So I went there. I went straight away to the room of the security guard. I asked him how many security guards are there. He said, sir, we sign on 4 revenue stamps, but we are actually 2 guards. I was shocked. Then I understood that the owner is debiting his salary account with salaries of 4 guards, but only paying to 2 guards. That means 2 guards salary is getting appropriated. I got a flavor of the integrity of the owner there itself. But still, I swallowed. I went inside. One rickshaw loaded with scrap was coming out. There were 2-3 big full sacks of scrap on that rickshaw. I told him just stop. That rickshaw fellow put that small rubber brakes and ran inside. Then he called somebody who had loaded that rickshaw. I asked him what this rickshaw contains. Then he said, "Sir, this is a scrap which was generated previous evening. I'm taking it out. We will sell it." I said, "Just remove the sacks." Below those sacks, I found 2 new, bags full of fresh raw material. Raw material as a scrap. He had no answer. And then when I shouted at the person who had come out of the office, he said, "Sir, Malik bolta hai ki you have to take out 2 fresh bags also." I was totally aghast. I suddenly connected that this raw material which is fresh is going out with scrap and then being repurchased by the promoter to make some unnecessary profits. So from there I went to inside the factory. I was carrying the fixed asset. I said there are 12 lathe machines. I could find only 9. I said, "Where are the remaining 3? He said they are installed in the factory of his relative. I said, "Why? You are taking depreciation benefits here. You have taken a bank finance for those machinery here. Why those machinery are installed there?" So I was taken a ghast there. Then I entered the accounts department just attached to the factory. There one person was writing a check for 13 lakhs against an invoice. I said, "Just show me the invoice." The invoice was towards the supply of raw material. I run towards the guard room. There was a registered inward register where raw material, whenever it comes inside, I try to find out the name of that supplier, whether his goods have come into the factory, but I could not find. Then I became angry with the person who was writing the check, such a big check. I asked him, "Whose invoice is this?" He said, "Sir, whenever we get big payment, our owner tells us to draw this big check in favor of this. No goods are coming from here." So the sundry creditors, which were being paid was also fake. Then I went there in the end, and I found a small truck getting loaded without any invoice or anything being checked. Then I asked them what is happening. He said, "Sir, hafte mein 1 truck without any invoice to the local market, and we collect the payment in cash." So this is how all these, if you put in your balance sheet, you see the salary account, that P&L was not good because the guard salary was fake. The number of employees was less, only 23 employees they were there, but on roll there were 60 employees. That means they were fake employees. So salary expenses were fake in the balance sheet, which we will never know unless we visit the site. Then the sundry creditor, that 12 lakh check he was making was also his relative's check, which he was diverting from the cash flow he receives. Then he was selling goods in cash, which were also not in accounts, and the machines were also not there. So friends, these are the things which are hard realities when you are taking a credit call. So when you do analysis of a balance sheet, just keep in mind that the figures which you are seeing in the balance sheet do not actually reflect the reality on the ground. So begin with analysis and the liability side, just see the capital side. You will find the skin of the promoters and find the net worth. Then how much capital has been invested and whether it is adequate to match the borrowings. I submitted in the beginning. Immediately ask, "Sir, आपकी capital तो 5 lakhs है, 10 lakhs है, 1 crore है, and you're asking for a 10 crore loan." So in my bank policy guidelines, TOL, T&W will not tally. So I'm sorry, sir. You may be giving good security, hero supplier, but I know this account is going to be bad because it is over leveraged. There is no chance of our giving. Then you have to also see the reserves. Lot of businessmen are playing games here. After the India's 2015, lot of game is being played with revaluation reserves. They will just reevaluate their machinery, their current assets, and then they say the value is high. They will your of this thing, or they will hike the level of their assets, showing that they are growing. So if these revaluation reserves are shown, which bring zero cash in taking credit call. Another thing, in capital, you have to always see whether the capital has come down. If it has come down from previous year, that means the capital has been withdrawn. That means a director has run away, a partner has withdrawn, or he is in deep trouble. He is taking away the capital of the company. So if capital is also withdrawn, you have to be very, very cautious. Another thing is, these companies, they are declaring 1000% dividend. Just imagine, we are getting dividend of 10%, 15%, maximum 20%. If our own Union Bank is not able to give more than 10% in a number of years, but some of these promoters whose relatives own the capital, they declare a dividend of 1000%, total disproportionate to the profit made. You have to also see whether they have done the dividend. And the most important thing, friends, as bankers, which you have to see in the capital is whether those shares are pledged for taking out. This is a new game. Now what the people are doing, they will pledge their shares in the company to a lender, maybe NBFC, and then avail an overdraft facility and invest in stock market. They play in shares. Today shares are why they are booming, because people are lot of liquidity they are putting there for fast gains, becoming rich overnight. So you have to clearly ask the finance man who has come, sir, whether your capital is pledged to someone. This is also very important, which nobody asks, and ultimately suddenly a notice coming when the people are enforcing their pledge and taking away capital. We find the company's gone out of hand and we run towards BIFR or towards MCLT. So be cautious in analyzing the capital first. Next slide, please. Then further going into liability side, you will find a beautiful column called unsecured loans. In most of the cases, this is round tripping of the money. The promoter will take out through expenses and then bring in as unsecured loan. And he will claim at the time of availing the loan that this is quasi equity. Sir, I will not withdraw this money during the currency of loan. He will keep it as an unsecured, he will not capitalize. But the catch here is that the interest being paid on unsecured loan will be 24%. With us, he will be paying 9%. For paying 10%, asking for reduction. But on the unsecured loan, which he'll bring in the name of his wife or his son, he will be charging the company 20%, 24%. So you have to first ask, sir, I am seeing these unsecured loans in your balance sheet. You ask for the agreements which he would have entered while availing the unsecured loans. Those have to be examined and found out what is the interest you are paying on unsecured loan, whether it is higher than the bank cost, whether he is generating that much cash flow that he can pay that interest also. No. So you have to put a moratorium on this, saying that this unsecured loan I will take as a quasi equity while working out your ratios only if these are interest free loans or they carry interest much less than the bank interest. And bank interest will always be mezzanine, higher than the claim of the unsecured creditors. That condition you have to put in the sanction letter. Now, are these long-term loans borrowed at arm's length, or they are just round-trip funds brought to create quasi equity? You have to verify loan agreements. Now, will these loans mature during the currency of bank loan to the company, upsetting the financial position? Now, you will take an equity base saying that this is the share of the promoter and this is the loan Now what happens is the moment you release loans, he pays off these unsecured loans and there is no liquidity and account becomes an NPA. So you have to insist that these loans, they are long term. They should be, the contract should be in your file, which should be longer duration than the repayment of your term loan if you are giving a term loan, or longer than 12 months if you are giving a working capital limit. Next slide, please. Now, you will find the balance sheet, especially when you go into the bigger loans, you will find that he's borrowed from multiple banking arrangement, consortium, or even from NBFCs. So you have to insist that he has to give you all the sanction letters. He has to give you a statement of each of account. And you have to see when was those account last serviced. Account have become SMA 0, SMA 1 or SMA 2. If you do not see these things, I'm telling you, it will be difficult to keep this account alive, performing asset for more than 2 years. Because he will be, pulling out your working capital funds and servicing those debts, which he has not serviced. Maybe a card loan or a housing loan or, an education loan. All sorts of loan he would have borrowed on the company balance sheet, showing it as, personal loans, but then he will not be servicing. He will simply divert your cash flow. So insist on, sanction letter of whatever loan is existing, and then verify the statement of each account, and then find out whether they have been unserviced for some time. And also from that statement, as a banker, as an intelligent banker, you see how many return check charges have been debited in that account during the year. Then you will know how many NACH or how many checks were bounced. Thereby you will know how this person's audit. When you go through, you should always, just before he signs, the auditor signs, he will write whether the account is NPA as per RBI norms or not, or a standard asset. So that column you must see before taking a credit call. So reading balance sheet along with audit report will make you a perfect banker and will make your career rise and make you a credit expert. Next slide. Now, another thing, as I submitted when I went for the factory inspection, was that a fake check was, against a fake invoice was being issued. So sundry creditors, if they are more than 90-day old, then probably they are fake. What happens is, see, anybody running, a business will need to get payment within 90 days. If he is waiting for more than that, then there is an understanding. And then the SME guidelines of Government of India, they have to be complied. Most of these people will be having vendors who are MSMEs. They have to be paid within 90 days. If he is not paying, on government compliances. So you have to see that his sundry creditors are not more than 90 days. If they are more than 90 days, again, a ring should, always be in your mind. Oh, there is some problem. Then you have to analyze what are these sundry creditors. Are they on the related parties? If they are on related parties, then they are not genuine. Mostly, what will happen is related party will draw a fake invoice and get payment, as I was telling you. Then whether sundry creditors are relevant to business operations. Now, he's manufacturing motorcycle parts, and he's showing a stock exchange person as a sundry creditor, or a big hotel where he held a function of his son's birthday party as a sundry creditor. No, those you can always ask. You don't do 100% checking because there is not much time and you have to do a lot of business. But doing that of 1 or 2 hours with the person who has come with the balance sheet, ask him, sir, show me the details of sundry creditors. Take 5 or 6 of them, the biggest one, the lowest one, the smallest one. Do ABC analysis. Then you will find that sundry creditors are not, irrelevant. They have to be related to the business. A lot of businessmen will be, putting the family sundry creditors as the sundry creditors of the business and diverting funds. Then another thing is, just see the total of sundry creditors. If it is bigger than the stock holding, then the entire stock is unpaid. What will he hypothecate? So first I should go to the level of stock shown in the balance sheet, and then you go for the level of syndicators. If syndicators are higher, how can you finance? Only against receivable. If you finance, there will be also problem. So you have to analyze that the stocks are certainly less. What will happen is, if you finance the stocks are more, then he will give you a cooked up stock statement later on. That stock statement, you will not reduce syndicators. You will end up giving in full DP, and then once you go for inspection, you will find the factory without any stocks. So please see very carefully the level of syndicator vis-a-vis the stock holding. Next slide, please. Now, the other loans, which I have already deliberated with other banks, you have to make a couple of calls. You see, you are all banker fraternity. So with the other bank with whom he is banking or he is borrowed, if you make a call, it makes a lot of difference, and it brings a lot of discipline also in borrower. He आपने ना स्टेट बैंक ऑफ इंडिया को फोन करा था मेरे बारे में, वो पूछ रहे थे. So he becomes cautious. So as I submitted, take the statement of account, status of the account you check up, and whether he's depositing regular cash in the account or he's dealing with checks only. If he's depositing cash also, then he might be into laundry business, a cash laundry business. You have to avoid such borrowers also, because they will be selling goods without invoices. I said earlier in factory which I saw. So that cash they will be rerouting. So you have to see that the level of cash deposited is also in consonance with the sales. And of course, you have to verify the number of checks which bounce, and just seeing the return check charges debited to the account. Next slide, please. Once you have dissected the main components of liability side, friends, it's time to focus on asset side. What happens is, as bankers, we say asset to asset hai, why do we worry about asset? No. Here is the catch. Here is the catch. See, if current assets are less than current liabilities, then current ratio is less than 1. That means he has no stake in the business. Why do you have to finance him? See, as per Chore Committee norms, as per Tenant Committee, as per our own Union Bank guidelines, he should have some stake in the business, and that comes from the current assets. If his current assets are less than current liabilities, don't finance. Then you have to see that the fixed asset register, most of the game which is played, which I said what the machines they will purchase in this company, install in their relatives place, and depreciation they will swallow, and sometimes they would be taking some rentals from hiring out that machinery, or even they would have sold that machinery to that fellow in cash. So tally the fixed asset register, ask Excel sheet, sir aapka jara fixed asset balance sheet se milana hai. If you find any gap or major gap, you have to confront him. Then depreciation is very, very important. See, depreciation does not give you cash in hand, but it shows where enough provisions for the next year or next 2 years to create a new asset if the present machinery fails. If he is not providing depreciation, then he is writing. He will be, if he has no depreciation available, how will he substitute the machine? How will he bring the margin to you for creating a new machine? So depreciation provision has to be there as per the act, as per the policy is following. And if he's changing depreciation rules every month, every 6 months, every year, you have to object to that. He has to follow the same line of depreciation also. Then, are the assets useful for the product line? You will find, wonderful cars lined outside the factory. Why does he need a big car when his turnover is 2 crore rupees? And he'll have 3-4 cars, one for family, one for outing. And then, some of the ostentatious buildings he would have acquired in the name of factory where, he would have hired it out. In the asset side, just disseminate 1, 2, 3, 4. Sir, these are the assets. I want to see the major asset. Just tell me. He says, "Saab, ये building तो हमने अपने brother-in-law को किराए पे दी है, सस्ती मिली थी, पड़ोस की building है, it was a neighbor house and we bought it." All those things are ostentatious. They will not give any future, confidence in that asset. So you have to take a call on that. And last but very important point is whether he has taken the insurance. See, what happens is most of the time the factories will be underinsured or not insured. If it is underinsured, then at the time of settlement of claim, he will not get. If he has a fire accident, bank will be left high and dry because the entire thing will vanish. So you have to ask him whether entire current assets, fixed assets, machinery are all insured or not. Next slide, please. Now, as I said, we were earlier examining sundry creditors. I said whether sundry creditors are more than stocks. Here you have to find out whether stocks are more than sundry creditors or not. Again, for the current ratio, then sometimes he will say, "Saab, I give lot of stocks, for value addition to so many vendors." That stock may not be his. That may not be paid for. That cannot be insured because it is on different sites, and you cannot hypothecate them. Enforce that security in case the account goes bad. So if stocks are scattered, he says why stocks are in this city, this factory, that factory, then this is a story which need not be purchased. This will not be very good story in long term. Then whether the stocks are fully paid for or not. You can always check, sir, I have seen that you are doing business through letters of credit and LCs are mostly usance 90 days and you are showing this in a stock statement. It is only 30 days the stocks have landed. So how do you say that this is a paid for stock? So there you have to confront him that I will give drawing power only against fully paid stocks. Then whether these stocks are relevant to production cycle. What happens is most of these people, when they take loan from us, they will purchase irrelevant stock. They will say, "Saab, maal sasta mil raha tha, I was getting a good deal, so I have just purchased this and filled my godowns," and that stock may not be relevant to the production cycle. If he is not into that business and he just uses your working capital funds to acquire and store stocks which have no worth, please don't go for that. And then most of the time the stock statement you will get will contain stocks which are obsolete. Those stocks which have no value, which have no movement. So the person in your office who does stock statement checking has to ask for the sheet and see the movement of stocks. Anything which is reflecting again and again for the last 90 days, you have to say it is obsolete. He has to come and justify that this is relevant to his future orders or he purchased it because he is likely to get an order. Otherwise, you have to not give DP against obsolete stocks. So if he is showing obsolete stocks, that balance sheet you cannot accept. Then non-current assets will also be sometimes very, very high. That also is not a very good sign. Next slide, please. Next slide. Now, here is the most important thing which I found, because I am a forensic auditor also. So this is where I found most of the game. See, we are very liberal. We will recommend, he'll say, "Sir, okay, sir, we'll give 25% margin on stocks. Let us take also hypothecate receivables. We'll take 40% margin on receivables." No, this is where the game is. Now you have to ask for the statement of receivables. Once in a while, you can shoot a letter to that receivable which is shown, "Sir, whether this party has supplied you things." Nothing wrong in that. He will become angry. The party may not respond. But most of the game today in balance sheet is cooking up receivables. He will take DP against this. Those receivables will never come. Once he becomes NPA and you ask these parties, say, "We have never interacted with him. Our invoices are not genuine," or "We had paid him long ago," or he will say his quality is so bad he need not get any payment. So whether these receivables are age wise, if you have given a 60 days usance for receivables, see that those receivables beyond 60 days are not part of stock statement. And then Whether these receivables are genuine, as I said, you can just ask for invoice and just telephone him. Hello, sir, I'm speaking from his bank. He's a very good party. I just wanted to know when this bill is likely. You may lose that account ultimately, but he will not go. He will know that this banker is the right person. He is lending with all genuine feelings for this my company. He wants my future to be intact rather than doing fake receivables. So if it is on related parties also, you have to be very cautious. So if he says, sir, this is my uncle's firm, that is my relative's business, no. If these receivables on related parties, you have to take them in pinch of salt. These are receivables. So now you see the sale. Now his sale is say are you going to finance such a fellow? That means his product is either not selling or the parties he has selected to, they do not have liquidity to pay him. They are delaying. The receivables are disputed. So receivables, if they are more than the 3-month sale, also you have to say, sir, this balance sheet I will not accept. Then are those receivables only on one party or they are well spread? If one party sinks, what will happen to our company? What will happen to our account? What will happen to our future? It will become NPA. So receivables to one party also attract your attention. That why? Suppose it is a Tata or a Reliance, which he is a sole supplier, then you can accept that. But if it's only one party in a private sector, he's just going on creating receivables, then also you have to be very cautious. Then another thing is, now a lot of competition has built up. A lot of NBFCs have come. Now what they do is they discount the receivables, and either they factor under LCs. So and there are a lot of companies who will give advance against those receivables. So you have to take a declaration, sir, your receivable which you are showing in my stock statement, which you will show if I sanction you loan. Those receivables should be virgin. They should be clean. They should not be pledged to anybody else. So if they are, if he's showing on liability side that he has taken receivable funding, so that you have to deduct eligible finance. Next slide, please. Now, another thing, when I was in Germany for 4.5 years, doing credit in about 15 countries, I have lent. There in Germany, see the research is very, very high. They go on evolving new assets, develop new technologies. In India, we just copy. China and India, we are just copying whatever the US or European people have innovated. So what is happening is they put the intangible assets very high. Because those may be copyrights. A lot of expenses are done to innovate a new product. Now, this guy in India, this column is misused. He will say, I have got a petrol pump and then 20 lakh is its, sort of goodwill. How can you take that as asset? Tomorrow if fire happens, who will give you 20 lakhs in return for that fire which will engulf a petrol pump? No. So you have to see that such funny intangible assets are also not in balance sheet. If they are there, you have to be cautious. Then couple of things which you have to see is whether the software is properly capitalized and depreciated. Softwares, suppose you're financing a mall, then there will be 20 sale counters. Software is very important. It has to change, it has to capture discount. If so many schemes that mall will be running. So software expenses are very high. So you have to see whether it has been properly capitalized. He's showing this, and whether he's depreciating. Well, every 3 years, software will become obsolete. You'll have to, publish a new, buy a new software. Then copyrights, licenses, intellectual property rights, whether those which are shown are, relevant to business. He might have bought a copyright for his IT firm and he would be capitalizing in his manufacturing unit. That also you have to see. And whether the goodwill, he has properly amortized is also required, because intangible assets is where the game is. So that once you find in balance sheet, go a bit deeper. Then, once he sees that this banker is knowledgeable, he's seeing these things, then, he will say, okay, I don't want your loan. And then that loan will not become bad if it passes all your tests. Next slide. Friends, we have analyzed two major pillars of the financial statements. Now we will have a small, a motivational break. What happened once India became independent in 1947? Mahatma Gandhi ji in Delhi, he used to sit in Birla's house every evening and listen to the grievances, suggestions of various people who used to visit him, because we had just got the independence. So, and father of nation, had brought it. So a lot of people used to go and compliment him. So one day, one British journalist has come and asked him, "Sir, your country has a population of only 35 crore. At that time, in 1947, we were only 135. Today it is 100. We were 35. Today it is 135. 100 crore we have added in last 71 years. Doesn't matter. That is our strength." So fellow said, he taunted. He said, "Sir, out of 35 crore people, only 10 crore are literate. With the 25 crore illiterate people, how will you build a India of future? How will you build an economy? They do not even know how to sign." Mahatma Gandhi assimilated, he understood, and he said only 4 words. He said, "Each one, teach one." And he stopped. And then, a lot of people wanted elaboration of this. Then Gandhiji said that, see, 10 crore people you yourself say are literate in India. And I'm going to motivate them to teach another 10 crore. Like a person having a housemaid will teach her how to sign. Or a poor boy will be adopted. A rickshaw puller's son will be adopted by a person who is, worth educated. So I will see that 10 crore people, bring another 10 crore into educated, group, and then within few years our country will become fully educated. Today, his vision shows that Kerala is 100% literate and literacy has crossed 67%. So friends, in Union Bank also, what I want is that balance sheet study. Somebody will be expert in analyzing receivables, another in stocks data. So you form groups and share knowledge with each other, because bank as a whole, once its talent is scattered all around, will attract very good assets if you share knowledge. So follow the principle of Gandhiji, each one teach one. Wherever new probationary officer joins, these days mergers have happened. So some banks, would not have such good exposure as Union Bank had. So you teach them and make bank, stronger and be winner bank by, sharing the knowledge of balance sheet analysis. We come back to our slides. Next slide, please. Now we come to the most important part, because this is where the servicing of interest will be captured. Now in this part, which is called as P&L statement, the topmost column itself has to be focused very intently. That is the component of sales. As I submitted earlier, whether these sales have related party sales. You ask for the journal of sales. Sir, I want to analyze, you say you're doing 50 crore sale. Just let me have a 10-minute glance over it. He will show you from his tally, the sales are repeatedly to one party, who is his relative's party or who is son's firm. No. The sales are, that means put up. They are enhanced to take extra finance. So then sometimes it may be genuine also. Say, suppose he get a 50 crore order from Adani for purchase of rice. So maybe that year Adani supplies may find time again and again, because Adani is a big exporter of rice. So here you have to analyze whether these sales, the component of sales, comprises of related party or these are one-time orders. If it is a one-time order, next year it may not be there. So your credit dispensation should be limited to what average sales he'll have next year. Not that this time he's got a big one-time order, so you finance on the basis of that. No. Remove the related party also. You tell him, sir, I'm not going to finance on related. Then he'll sale. See, Union Bank has different rates of interest for manufacturers, different for traders because the risk perception is different. A trader will have 100 crore turnover, stock zero. Most of the business will be happening on telephone. He will have only a small shop. A manufacturer will have only 10 crore turnover, will have a big factory. So many labors running into so many, 250 inventory items. So if he's putting up his trading sale, you ask him, sir, in balance sheet, you cannot merge manufacturing sale into trading. Otherwise, I will classify you as a trader. I will not give you the benefit of interest of a manufacturer, which is much less. So then one mistake which most of us do is we get, very happy to see big turnover, which is loaded with GST. Now, GST is 18%. And if it is a, premium good, it is 28%. So what they do is, suppose turnover is 10 crore, they will show 11 crore 80 lakhs. And you will work out, the eligible finance based on the turnover. No, you have to exclude GST. GST has to be excluded from CMA data also. Most of us are doing overfinancing by taking GST figure loaded with the sales. So please remove that. Then he will be, showing the raw material cost, suddenly high. Sometimes see oil related things, petrol cost is going up. Suppose you are dealing with a unit which is having petroleum as one of the raw material or plastic as raw material. Then you have to compare the sales of a similar type of company of more or less similar size. Maybe you will call your another branch. You will say, yaar, aapne wo wala, you have financed one unit doing similar activity. Can you just share what are the sales is doing? What is the profit he has made? And what is the stock normally he keeps? What are his receivable terms? How much time it takes to pay sundry creditors? Just have a phone. That way you will enhance your credit analysis power and become a good banker, which you all deserve to become. Next slide, please. Now, another place where most of these corporates are doing a big play and which ultimately bring the bankers down and make us fail are the false expenses. What happens is that suppose he throws a party in a 5-star hotel for engagement of his relative, and that 12 lakh or 13 lakh bill he'll simply pass on as marketing expenses in his company. Now you cannot stop this, but if you come to know of this, because the servant or the accounts manager will tell Saab ye to uska kharcha hai, iska kharcha hai, that will give you the idea of his integrity. So it is remaining to you whether you want to finance such person or not. Then sometimes there will be a heavy discount given to in invoices. He will say, sir, we have given 25% discount. That discount is also collected in cash by these fellows. If there are 1 or 2% discounts in a business, it is acceptable. If you find while going through that it is running into crores, that means that much money he's diverting. So discount account also you have to grab. Another problem is we do not see legal expenses. See, legal expenses, if they go up, that means he is running into litigation. There are problems in the company. He has some court hearings going on. So whether you like to finance such a person who is fighting with his suppliers, or he is not paying, or he is having a case under section 138, he is defending himself in various courts. And then sometimes these people are putting high audit fees. What happens is when you force a chartered accountant to sign a balance sheet which is fictitious and showing figures which are not genuine, then auditor will ask for disproportionate fees. Normally fees should be 1 or 2 lakhs. Sometimes I am seeing in balance sheet audit fees running to 10 lakhs. Why? Why auditor should ask for 10 lakh fees? That is because he is forced to sign on a document which is sort of inflated document. So audit fees also, if it is high, then whether the depreciation and amortization expenses provided, suppose he has borrowed something and it is paid in installment, or whether he's creating depreciation reserve, all this has to be seen. And the best thing is that most of these accounts, get attached. You would have seen the IT notices will come because the companies are not making provision for taxes. If he's not providing for taxes, even as a banker, all our salaries are coming to us net of taxes. We are paying taxes in time, filing returns. How we can finance a person who is not paying his taxes? Tomorrow he will create problem, his account will get attached. So whether he is making proper provision of taxes is also to be examined. Next slide, please. Now, while going through the components of income, a credit sense, should become very heavy on your mind. Whether the profit he is shown is out of core activity, whether he is selling his goods. Sometime what happens is he will show, a profit out of sale of some asset. He will sell some machinery. He will sell, some of the technical knowledge he has, or he will bring in investor who will have charge on whatever sales he's doing. So such activities are not core activities. Whether his business is performing has to be seen out of the sales, which should not be fictitious sales or sales from other income. Other income will be like he is diverting, putting in FDR, using funds in stock exchange. So then his income from dividend out of this, or suppose there is a fire in the factory and he gets say 50 crore claim, that he is showing as other income. Or some old debts which were there for last year, he recovers this year, or some non-core activities he monetizes and then books in as other income. That also has to be analyzed. And whether other income is higher than profit will also show that his business is not doing well. If it is other income is higher, you have to immediately disseminate it. You have to decode it. Why other income is showing and then showing a very rosy turnover? No. Then whether the EBITDA margins, earning before interest and depreciation, whether these margins, they are comparing with the peer level companies. I submitted, you just call your colleague what is the profit this fellow has made. Get all this into your ecosystem, into your character of a credit analyst. You will not recommend a bad proposal. Bank can wait. Your bank is 103-year-old. It will be 1,000-year-old if you do good. People like me, you will come and go, but bank will survive, benefiting millions of Indians and people worldwide if we take proper decisions. There is no hurry. You go on booking advances, but do quality lending. Next slide. Now, another important thing is the cash flow statement, which is always with the balance sheet. I will come to point 3 first. There are 3 sources of cash flow. The first one is, of course, operating activity. The second one is financing activity, and last is investing. Now, operating activity, focused mostly. You must analyze whether his operations are yielding any cash flow. Whether he's making a railway coach in which he'll get a payment after 3 years. Then what is the use? When will he service your interest? When will he pay your installment? If he is doing a business cycle which goes beyond 12 months, what sort of current assets he'll have? You can't have. No, those industries are financed with a separate angle. So you have to see whether he's through operating activity he's generating, or when financing activity is being analyzed, whether he's over borrowing, over leveraged. He's diverting funds in investments here and there, and those dividends he's bringing into cash flow. These things should be deeply to just find out that your term loan is 1 crore, interest rate is 10.5%. Whether he'll be able to service every month. Then installment, EMI, this DSCR, whether it will be adequate as per your policy guideline, whether it will be 1.75 or below. Deeply, you will take a call from heart, and you will end up very happy in delighting your top management as well as your customer that you've got a good asset and a good friend to grow with. Then based on actual movement of funds, cash, loans and receipts and payments which are happening through cash flow, you should find out that this will be a viable proposition. Cash flow, as I restart in this paragraph, is that it is an independent statement prepared on the basis of both balance sheet and P&L. You don't need a very complete statement. It digs from balance sheet also, it digs from P&L also, and it really gives you an idea whether this unit will survive. And you have to focus on operating activity to ascertain the viability of the core activity which you are financing. Next slide, please. So friends, I have submitted whatever little experience I had. I would like to close with a small story of few minutes. What happened till 1953, no human being had scaled the Mount Everest. And Edmund Hillary's sister, who was a keen encourager, went to Alps, various European pinnacles, and scaled them up. She encouraged him to go to Nepal and scale the Mount Everest. He said, no, it's impossible. Till date, nobody has gone. How can I succeed? No, it will be a problem. But she said, no. $1,000 from a Christchurch bank in New Zealand. Because, when you go to Mount Everest, Nepal government charges you $10,000 fees. So at that time, it was slightly less. She borrowed and gave to brother. No, brother, you go. You scale the Mount Everest. Make me, actualize my dreams of my brother. So he came and, he went to base camp. There, he started acclimatizing. The oxygen level is less, temperature is very freezing, snow, avalanches are there. So he was acclimatizing and getting accustomed for scaling. Pickaxes, ropes, ladders, go up, go down. One day he fell down 35 feet and broke his back. And he was immobilized. He dialed his sister on satellite phone and said, Didi, I'm coming back because I cannot scale Mount Everest. She was very upset, but she motivated. She said, you'll be okay. Take some injection, take some medications, try at least once more. Then, he took some rest, took some injections, and again, when he was preparing, his body, did not respond. And he said, okay, I will pack. So in that gloom, in the night, he was peeping out of the window when he suddenly saw Mount Everest shining below moon. The moment he saw it, he started weeping. He said, oh, I wanted to be there. My sister wanted me to be there. I'm so close, but my body has given way. I will not be able to do. Then, he started weeping, ran to his bedroom, put his head into the bed, and cried. And then suddenly, the assimilation of energy inside him took over. And he became stronger. And then he ran in that cold night and shouted. He said, oh, Mount Everest, your height is only 29,029 feet. I am a human being. My height is only 6.5 feet. But because I am a human height to whatever level I want, I'm coming. And within 15 days, friends, he went and he became the first person to scale the Mount Everest. You are also capable bankers, proud members of Union Bank of India. You will also assimilate the intricacies of balance sheet and give this bank great assets so that this bank becomes first bank in India from fifth bank. All the best to you. I will only say, na sangharsh, na taklif, to kya maza hai jeene mein. बड़े बड़े तूफान भी थम जाते हैं जब आग लगी हो सीने में. Friends, go burn your midnight oil, assimilate balance sheet and give best loans. All the best. Happy New Year. Thank you very much.
Thank you so much, sir. Really, truly very insightful. You have dissected each and every item, assets, liabilities, profit and loss, all everything, cash flow. So it was really very insightful and very beneficial for all of us. Sir, some of the questions we have received in the chat box. I request Dhirenji to just ask our sir whatever questions are there, and then we'll finish it within 10 minutes.
Yes, sir. We have received many questions. So there are some good questions in there. And the first question is from one participant, Mitali. One of our borrower is insisting to consider preliminary expenses write-off to be added as computation of DSCR. Is it justified? He is insisting on the same as it is a non-cash expenditure.
Yes, it is justified because in any project, preliminary expenses are part of the projected expenses and they really happen. Moment you decide to inaugurate a project, you'll have to go for due diligence exercise, go for project report. Some consultants will come, even soil testing will consume a lot of money for the project site. So these preliminary expenses, they actually take away the working capital, the promoter's working capital, which he is intending to bring. So I think his demand is justified. Only thing is you have to analyze those, whether he's padding up, whether these are genuine, whether he's supporting with document or it is only hearsay. If he can support it with bills, I think we are taking in a lot of projects we have financed, these prelim expenses were funded, were taken as margin.
Sir, another question is, how important do you think is director's report? What impact does it have on the profitability of the firm? How, as a banker, can we decipher the company's performance by going through the director's report?
Sir, you are muted, sir. Sir, you are not audible. Yeah, it's okay.
Now it is.
Yes, sir.
Yeah.
Now it is audible.
Now audible?
Audible, sir.
Hello?
Yes, sir.
Audible.
Now it is audible.
See, very. I have, with my little experience, put balance sheet into 4 pillars. This is the 5th pillar which you're asking. See, point is that a director's report is always a futuristic statement. It is a rosy statement. As far as the performance is concerned, till the period, whatever it captures has to be taken as truth. All other statements, they are promising. He's telling he might get a 800 crore order or he might expand. But those, director report is the report to be read in the end. It is not required as a credit analyst to, sort of, unnecessary mold your mind to take a credit call, because these are all rosy pictures and these are drafted by professionals. The promoter only signs. Other things are factual. So please don't give much credence to director's report. It is required as per company law. He has to put it. But apart from a mandatory document, it has no relevance for banker as well as credit analysis decision making is concerned.
Sir, one question. So there are many cases where auditors are writing in the audit report that as per the information received by the promoter and in form of miscellaneous assets or miscellaneous liability. So how to deal with this?
See, since auditor is writing this, the role play as per the various associations who are monitoring the role play of auditors, they say that he has to write it this way. See, no auditor like a banker will ever write a thing told by promoter which is not near the truth. So when auditor captures that and he captures it that saying that these are the facts which promoter has submitted, we have to accept them because auditor is saying, so we have to accept them. Otherwise, if it is in the part of director's report, we can still ignore it. Since auditor says he, as per the rules, of audit, black and white in the financial audit statement. So we can consider that as part of the statement of the auditor.
Sir, one question is, sir, how to check the quality of equity?
Very important. What happens is these people, suppose he's coming for a term loan, he will take a hiked up if fake invoice, which will also carry the margin money. I remember I had financed one company in Switzerland, which was into a very strange type of business. In Switzerland, what happened in East Germany, old machinery was being sold per kg as a, iron. And those one fellow was bringing that machinery into India, Hong Kong, Bangladesh, Pakistan, and selling as new machinery. Now that was misused through fake invoices, and margin money was created, and that margin money was brought as equity. So what we have to do is the basic principle which way we succeeded was that you ask for the ledger account of the equity, number one. Now ledger account of equity will show for the initial share capital, and then what are the other additions which have come to that statement. If you see, then that statement has to be supported with the bank account statement. His bank account statement, you cross verify. If this is not a entry, not reflect in bank statement. If it is a fake entry created out of this commission, or taking money from the person from whom you are purchasing machinery, then it will be immediately caught. So basic things in a branch setup which we can do is ask for the statement of account from which the equity has come, and the ledger of the equity in his tally, and compare that. There itself you will catch it.
Sir, your voice is not clear, sir.
Am I audible, sir?
Yes, sir. Now it is okay, sir. Now it is okay, sir. So in between your voice was breaking. Sir, one more question is that one of our customer who is a director of a company submitted his IT return. He showed in his balance sheet in capital he is showing interest on term loan. Whether he can show like that?
Sir, you are muted. So you're not audible. No. Not audible, sir. Some issue.
Audible, sir?
Not audible, sir.
Hello?
Yes, sir. Yes, sir. Now it's
Yes, sir.
okay.
Now you are audible, sir. Sir, have you got the question, or shall I repeat? So that is the last question, sir.
Oh, some problem.
So, sir, we have already taken approx all the questions from getting from the participants. So, sir, over to our principal, sir, for
Yes. She has joined.
I think there is some problem at their end. So,
Sir, yes, yes. Yes, sir. You can unmute yourself.
You are muted, sir. Hargobind, sir, you are muted. Please unmute yourself.
Now it is clear, sir?
Clear, sir.
Hello? Yeah.
Yes, sir. It's clear.
Yeah. Regarding the equity, I'll resubmit my statement. Verification of equity is done through two documents. One is the ledger abstract from tally of the company or business enterprise, and the bank statement. You just compare the entries there, the game will be clear. Very, very clear. Because mostly the cooked up equity comes through
Some problem.
Away. He will never show you. Next question, sir.
So this is the final question. One of our customer who is a director of a company submitted his IT return. He showed in the balance sheet in capital he is showing interest on term loan. Whether he can show like that?
If he is his car, if he is a professional chartered accountant director, suppose he has taken a car loan, then he is eligible. You have to disseminate what term loan he has shown, because term loan he should not have written, he should have written car loan. Now the word term loan is showing the problem. So if it is a car loan, he is eligible, sir.
Okay, sir. Thank you very much, sir, for addressing all the questions. So now I am requesting our principal, respected principal Mishra, sir, for.
Sir, thank you so much.
Let me come in. Let me come in, Mr. Ji, before this formal kind of this vote of thanks takes place. I do have something to say. Hargobind sir, I have listened to you throughout the discussion. We do understand credit is a very, very vast subject, and it cannot be covered in a single webinar like this. But still, it was so much informative and insightful, and especially the way of delivery that was amazing. And I hope the participants might have benefited a lot. And as further, the questions have been responded in a very lucid manner also. So thank you very much, sir, for your contribution, and all what you have done today contributed for the benefit of our unionites. Thank you very much. Now over to Mishra Ji. Mishra Ji, please.
Yes, sir. Thank you so much, sir. Thank you. First of all, our gratitude to the top management, CGMHR sir, GM sir, for giving us the guidance, initiating this activity, and always motivating, inspiring all of us. So thank you very much, sir. And today's webinar, it was really wonderful, sir. Excellent. The talk, the way you have dissected the balance sheet, it was really wonderful. And the motivation, you always say that lend more, live more about the bankers. So lend more, live more. If the bank as a lender, they will lend definitely, the life of the bank and the life of the lender will increase and will go a long way. And the way you are motivating the budding bankers, really wonderful, sir. The energy level, the clarity about each and every component of the balance sheet, as it is said that nothing is left in the right and nothing is right in the left. So the way we can dissect it, it is really wonderful. Each and every component, how to see, how to do the due diligence, and then practical example which you have given right now, sir. It was really, it was an eye opener for all of us. And the way you have seen, just started this session with the quote like परिंदों को नहीं दी जाती तालीम उड़ानों की, वो खुद ही तय करते हैं मंजिल आसमानों की, रखते हैं जो हौसला आसमानों को छूने का, उनको नहीं होती परवाह गिर जाने की. So really wonderful, motivating, as well as the way you have each one teach one. The quotation of Mahatma Gandhi, sir, Mahatma Gandhi ji, and who has inaugurated the registered office of our bank. So for which all of us, all our unionites are proud of, and you have mentioned that and touching the each and everyone's heart today. I think it will go a long way. You will definitely guide us in future also. Looking forward for a great association with you, sir. And today we are honored with your talk. The way you have just motivated us, a banker, how to take the decision, how to go ahead, because this is one part. The main purpose of banking is lending, which is already there in the definition itself. I always say that, yes, the way you have delivered, sir, it was really wonderful. Now each one teach one. Our call also is like that: learn, practice, and share. So everyone will learn, practice it, and then share it with everyone. Then yes, definitely the literacy rate जो आपने quote दिया था महात्मा गांधी जी का, it was really wonderful, sir. The assimilating cash flow and everything, it was really wonderful, sir. Thank you so much, sir. And लास्ट में जो आपने लाइन कहा वो भी बहुत ही टचिंग है, सर. न संघर्ष न तकलीफ तो क्या मजा है जीने में, न संघर्ष न तकलीफ तो क्या मजा है जीने में, बड़े बड़े तूफान थम जाते हैं जब आग लगी है सीने में. तो हम यही कहते हैं कि सिर्फ हंगामा खड़ा करना मेरा मकसद नहीं, सारी कोशिश ये है कि तस्वीर बदलनी चाहिए। मेरे सीने में न सही तेरे सीने में ही सही हो कहीं भी आग, लेकिन आग जलनी चाहिए। तो ये आग आज जो आपने जगाया है हमारे सीने में, हमारे सारे यूनाइट्स के सीने में जो आग आपने जगाया है, वो डेफिनेटली क्वालिटी एसेट क्रिएट करने में, इस सोसाइटी के डेवलपमेंट में और इकोनॉमी डेवलपमेंट में, ओवरऑल द डेवलपमेंट ऑफ द इकोनॉमी। एंड आपने बताया कि 103 साल, 1000 साल, so those contribution always will be there. I think I also extend a really heartfelt thanks and sincere gratitude to you, sir, for accepting our request and coming to us and addressing all of us and all our audience, unionites, senior members, executives from the central office, executives from the field, all branch managers, all officials who have joined today to listen. We are very much thankful to them. Again, going forward, we have many more webinars and many more Guruvar which are also. Tomorrow again we'll be joining with Guruvar which are our senior faculty, discipline in charge, risk management will take the session on Basel Accord. So thank you so much all of you. I think this is a really great day today. You have made the day today, sir. It was really wonderful. Thank you so much all. Thank you. Thank you very much. And thanks our Dhiren Kumarji, whose contribution was a lot, and because of the technical glitch, sir could not join on time, but just in the gap period he started it. So thank you, Dhirenji, and thanks all our faculty members, coordinators, Srilata, who is who has played a very critical role in organizing this webinar. So thank you very much. Thank you, and all the best to all of you. Thank you very much.
Thank you.
Thank you so much, sir. Thank you.